Hello, AMC people. Should I do it? All right, welcome back to another video. If you are new here, which you probably are, welcome to the Wall Street Stonks versus Wall Street Bets challenge. I am a long-term investor. I am a very responsible investor. I also trade options. I have multiple accounts for multiple strategies. And one day I woke up and I thought to myself, how would I do if I bought these meme stocks, momentum stocks, stocks that people are talking about on Reddit, stocks that are subject to short squeezes or gamma squeezes, stocks that go crazy fast? How would I do? I asked myself that question. I looked at my bank account. I had some money. I'm like, let's play around and find out and make some YouTube videos about it. A lot of people are loving what we're doing so far. The first stock I bought was CLOV, and we're currently down about like 28% or so. But we're not going to talk about that. We're going to talk about what should the next move be. I'm going to keep the CLOV shares. We're going to see how to maneuver out of that by selling puts and selling calls and getting our initial investment back and kind of lowering our cost basis at the same time and trying to figure out how to navigate that space. Should I buy AMC? Let's just jump right into it. Actually, before I jump right into it, make sure to hit that like button so more people see this video because this challenge is really fun. If you like what I'm doing here, definitely subscribe and you don't want to miss how this all plays out. Okay, jumping right into it. When I typed in AMC news, this is what kind of got me curious. Every single article here is sketch. It's all FUD. It's all weird. It just, I don't know. Jumping over to Ape Wisdom, my favorite lagging indicator that tracks Wall Street Bets, Wall Street Bets New, Wall Street Bets Elite, stocks, investing, SPACs, options, and day trading subreddits. And something that I've been noticing as I've been tracking CLOV is AMC is literally number 1 or number 2 or number 3 always, along with GameStop, GME. Now, what I want to track is, does this affect the price at all? The more people talk about it, does the stock price go up? Or is it just raising awareness for people to buy it? So if we click on it, we get to see the overall AMC sentiment. And it seems to overall 75% positive sentiment. Nearby words, obviously, GME, then buy, then bought, then ape, then more. So far, these are all great. Then BlackBerry. I don't know what the whole deal with BlackBerry is. I remember during the whole GameStop thing when everything was going crazy, everybody started to jump from stock to stock and the stock price were going crazy. So BlackBerry was another interesting one. I don't want to get into that right now. I don't want to play around with BlackBerry stock. I'd rather focus on AMC, GME, and CLOV in general just to see how I can navigate through there. Next, apes. Of course, you guys call yourself apes. I'm willing to adopt that verbiage. Calls, money, post, buying stock, hold, squeeze, why? So these are all the terms that are found nearby the words AMC. It's very interesting to see how people are talking about the stock. That's why I love looking at this and seeing overall what the mentions are kind of saying and what it's like. So I stumbled upon this Reddit post by Short Checker. He posted it on Reddit on Wall Street Bets 12 days ago and everybody loved it. He said, let me clear the air here regarding GME, AMC, and CLOV. All right. I'm taking the initiative to clear the air. I'm probably going to get a lot of downvotes, but I'm probably going to be straight up and honest here. Great start so far. Let me just jump into GME, AMC, CLOV, and what he thinks all of this means. GameStop was being shorted as per technicals. It was a company that was going to shit bankruptcy if they didn't change leadership and incorporate strategic changes to their business model, aka e-commerce and the like. I agree with that. Additionally, the biggest reason GME picked up in the late December, early January is because it had ridiculous and unprecedented short interest of 140%. By the way, the percent sign comes after 140. Making the short squeeze extremely likely to occur. That makes a lot of sense. The stock picked up, gamma squeeze and short squeezes occurred, and it's still the play to this day. Why? Because the remaining 15 to 20% short sellers still holding their positions are the same ones from the beginning who have accumulated billions in losses, thus still considering a major play, plus the company making big changes to their board of directors and adding e-commerce and the more, etc. That makes sense. GME is making a lot of changes and a lot of moves to move forward to something better. So I don't know how some squeeze would happen. I guess if people just keep holding and keep buying or whatever, but I don't know. Let's see what his thing about AMC is. AMC. This stock sucked when it first picked up. The only reason this stock got picked up was because of the nostalgia and because people missing out on GME. Interesting. The short interest percentage on AMC back when GME rallied up was well below 20%. Interesting. This company as well was on the verge of bankruptcy, and it got picked up by supporters like us, apes, the more shorts loaded in. Okay, so people bought and then people shorted. AMC, due to the retail investors picking up the stock rally, started to work on their business model and accrued $1 billion in investments and has started to really concentrate on building the business into a successful, hopefully, successful business. When the CEO said the talks and bankruptcy is no longer on the table is because they knew that it was time that filing for bankruptcy was a real possibility for the company. Again, the CEO has fucked over many investors in the past by trying to continually dilute the float. Yes, I remember that. There was a very important vote. How did that vote go, by the way? I should look into that. On the top of that, prior to the stocks rallying on the board of CEOs, paid themselves handsomely, and then the company was about to fail. Now the narrative is different for AMC, as the shorts that are in the stock are the same ones from the beginning and have incurred unrealized losses. Also, this seems that the company has really pivoted to reconstruct their business model to become a more successful one once COVID-19 is no longer hindering the world from being normal again, thus making AMC a very, very big play. Okay. CLOV was ridiculously shorted the moment it hit IPO. This had nothing to do with GME or AMC. The short interest on CLOV has been there since IPO. The play for CLOV is that of a Medicare Advantage disruptor that provides real use cases and a cost-effective solution for traditional Medicare Advantage subsegment that hasn't changed in ages. The stock has a short interest now probably greater than AMC and GME combined. Low float, no debt, very bright future for its growth, which is why I actually picked CLOV first during this challenge. But it's also heavily invested by Google and other major players. The firms shorting CLOV are not the same who are shorting GME and AMC. Separate that from your minds. Yes, Melvin Capital, Citadel, others targeted AMC and GME, but this has no relevance to CLOV. No one cares. It's a viable stock that has potential to disrupt market segments. It's also very heavily shorted. That is the play for CLOV. Simple as that. And then he goes into detail about some other stuff. But it's very interesting. It piqued my interest in AMC. I'm curious. Taking a look at the dark pool data, there's a lot of dark pool activity going on here. The net short volume is 6.6 million. The net short volume in dollars is 233 million. That's a lot. I bought Ortex, so you don't have to. If we jump over to AMC's Ortex data, it's very interesting stuff here. Their PE ratio is just garbage. Everything else seems to just be weird. Analysts, 4 of them say sell, 5 of them say hold, 0 say buy. Return potential is a negative 84.98%. Their price target, analysts say, is $5.25. Ouch. I don't think it's going that low. If we jump over to the short interest data here, the current days to cover are 0.62. You're going to need that to be a little higher if you're looking for some sort of squeeze. The short interest change has gone down 6.5%, which is interesting. The cost to borrow is 1.67. It is down 8%. Cost to borrow minimum is 0.54. Cost to borrow average is 1.47%. A lot of interesting data here. I'm going to add this to the list of things that I'm looking at. So I want to see how this all plays out. Saw this article, volatile ride for AMC Entertainment Holdings stock price on Friday, moving between 34 and 38. AMC Holdings stock fell 8-9% last Friday. That's fine. It fluctuated 12% from the day low, the day high. So it's very volatile. I like that in terms of options. You can really utilize that in options. Given the current short-term trend, the stock is expected to rise 160% during the next 3 months, with a 90% probability hold a price between 91 and 235 at the end of this 3-month period. What? So, jumping over to the stock, this beauty was $1. Then it jumped to 19, came right back down. Then it kind of did its thing, and then, it just did its thing for a little bit until it just really picked up from like 13-ish, 12-ish, all the way to 72, coming right back down to about 39, jumping right back up to about 63, leveling out at around 50 to 60, then following pretty much the overall market and the meme industry, right back down to about 31, leveling out at around 38 or so, currently at 34.96. Now, when I look at this chart, this is what I see. I see a worst case scenario of 12. I see a best case scenario of a breakout from 31 up to about anywhere from 54 to 64 is kind of what makes the most sense if it does decide to fill this area right here. Now, volume has been up and down. Volume, it's consistent, but I'm not quite sure what people think is going to happen here. A price target of 90 would bring the stock up to here. That would mean you're looking at a trajectory like that, or a straight up gap up in the next couple of months. Interesting potential. I'm curious to see how that plays out. I'm also curious to see where options are, what people are thinking options wise. I like to always jump down into the option statistics. 583,000 calls, 466,000 puts. Pretty split. People are putting their money where they're putting their mouth where their money, putting their money where their mouth is. Is that the saying? Anyways, implied volatility through the roof. People are expecting 226%, 222%, 233%, 183%, 215, 168, 201, 181, 174, 80%, 142%, 139%. People are expecting this thing to fly. Now, jumping over to the August 20th contracts, I like to take a look at volume. I like to take a look at different levels that people are pouring their money into and expecting. 7,473 volume on the 145s just on Friday. And people are paying $80 for that? That's kind of wild. Moving up, you can see the options prices are actually crazy. $600, $700 for one contract. And the puts, kind of similar. Very interesting. I'd like to think about the best strategy here. How should I get my foot in the door with AMC? Should I start off right now buying 100 shares? That would cost me about $3,400 or so. Or should I hop over to August and start selling the $20 premiums? I can sell a $20 put, collect anywhere from 166 to 170-ish, depending on what the market does. Collect that much money and start putting the money that I collect from the puts into shares and build an essentially free share bucket of AMC shares. Does that make sense? Did I say that weird? If I sell the $20 put, I collect $166. I use that $166 to buy shares. And then I rinse and repeat. I could also just hop over to the weeklies and just do this every single week. I could sell the $30 put. Worst case, if I get assigned, that's my starting position instead of what it is right now at 34. Save $400. Might as well do that. I think I might do that. I think I might just start selling puts, collect that premium, put it into the stock, or collect that premium and start buying calls. I don't know. If I buy a call that's representative of 100 shares right off the bat, and I could just use the premium from the puts to supplement the money that I'm spending on the calls and just build a whole system out of that. I like shares a little bit more. So I think this week, depending on how the market goes, I might start building out a little AMC account along with that CLOV one. If you guys have any questions, if you guys have any suggestions, please let me know. I'm very curious to see how this plays out. Again, if you're new here, hit that thumbs up button. Make sure you subscribe. You don't want to miss this challenge. I'm having a lot of fun with it. A lot of people are having a lot of fun with it. So please let me know if you have any questions. I get back to like every single comment in the comments. Check out my old videos. I'm not lying. Let me know how I should play this, and I'll catch you guys on the next video.